Hello, today is the 7th of February 2015. I'm Tennant. Let's start by going over the calls from Thursday's close. We had mejt targets of 2055.65 and 2053.76, and each of these targets printed. It's important to know that even when you're gapping up and hitting new recovery highs, that this 2053.76 price was a product of a mejt ultimate signal, and there have been only 3 failures since the summer of 2002 with that signal out of probably well over 1,000 signals given. Let's review the last 2 days' action. Early on Thursday, mejt said ultimately lower prices would print, and it produced the color-coded target here in gray. In the afternoon, it said the rally wasn't for keeps, and it produced the color-coded target in blue. Yesterday, it said the rally was a false move, and it produced the color-coded target in yellow. And in the afternoon, it gave us a sell signal with a target here as a minimum. So all the way up, mejt was saying no. There is an old mejt target of 2075.58. If I'm correct about this being a major change in trend, I would prefer that that price not print, because the system likes to leave failed targets right at major trend changes. There is usually support under these prices, but as I said earlier, when the support has been tested once, it's less likely to hold when it is tested again. There is some support from other factors, but we'll talk about resistance as well. We can't use the mejt system because there are no new targets for Monday, and the next higher and lower prices I think are too far away. This one isn't, but I don't think it'll print. Well, there is some support. If you take the last decline from the all-time high, this is a Fibonacci 61.8%. And if you just look at the move up from the last rally, you got a Fibonacci retracement here too. So if we rally from here, I guess you could justify it, but I think there are some things that will outweigh that. This is a system of a friend of mine. It's a brilliant system. It gives us support resistance levels. You can see how well they've defined the current move, and that we are right at a resistance level now. This is the lower trend line. Don't do that to me. This is the lower trend line. I think it's going to break at some time. If we make a new parallel, and we move it up to the all-time high, we'll see how it identified the high on Friday. This is the Fibonacci retracement we discussed earlier, but if you change this 61.8% retracement to a 50% retracement, you'll see how the distance from here, from this price to the low, is equal to the distance from this price to the high. It makes it a legitimate target, and the fact that this move was impulsive and quick, and this move is overlapping and slow, usually means this move is going to win. Another important factor is the gap here Gaps like this tend to fill and usually fill pretty quickly. You'll recall at the FED announcement the price was 2029.53. We dropped 48.63 handles. There's usually a three-leg whipsaw. Leg 3 should end at 2078.16 plus, but sometimes one of the legs ends early. I think we came close enough to say that that leg was completed. So there is some support here. I have reasons for believing it'll break. This is a significant resistance level here based on a number of systems. The late rally doesn't impress me because rallies in the last 10 minutes of trading that go counter to this trend tend to be short covering rallies, and if so, they'll be reversed quickly. If they are reversed quickly, we should take out this low early Monday, ideally by gapping over it. That's if resistance falls. If support falls. And if resistance falls, we're likely to gap up sharply. So the call for Monday is we are at a support resistance level. I think resistance is going to win, and I look for lower prices, which would be confirmed if we took out this low promptly, ideally by having a gap under it. If the call is wrong, it should be obvious at the open. And that's today's call.